Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. I hope you've had a wonderful weekend. And in today's packed program, I'm going to be showing you the general overall picture with Bitcoin, as well as do the micro analysis and where I think the market's going to go in the next few days. This week is an incredibly important week, as you'll find out later on when I do the micro analysis. But before that, I'm going to show you a chart that no one is talking about, and then you can make up your own mind what you deduce from that chart. But before I begin, the usual polite reminder, please remember that all my videos are for educational purposes only. I'm just giving you my perspective. So please do your wider research before you make any important investment decisions. Also, I just want to make an announcement that over the last few weeks, I've been doing videos every single day. Going forward, I'm not going to be able to do that on a regular basis, but what I will do is I will make around about 2 or 3 videos every week anyway. So look out for the videos at around about the same time if I'm doing them, but in between the videos I will leave important information on the Twitter, and if you aren't following me on Twitter yet, then you will get the link below all of my videos in the link below. So with that out of the way, I'm going to start off on the very important BLX chart on the monthly time frame here. And this is the chart no one seems to have referred to, and I've watched a lot of YouTube videos. Nobody seems to have come up with this. The blue line is the 8 exponential moving average. The yellow is the 21 exponential moving average. As you can see currently, when we topped out at 64,000, that's the first time that we saw the price go below the 8 EMA on the monthly chart. We managed to get above it again and create another high at the 69,000. But since then, as you can see, for the last 4 months, we came down 4 months ago. Then we've had a series of 3 candles that closed below the 8 EMA but found support on the 21 EMA, and the current one is exactly in between the two. And if we go back to the 2017 bull market, guess what happened? Once we topped out at the 20,000, we broke below it first, then broke back above just like here, and then we had a series of candles in between the 8 EMA finding support on the 21 EMA before we finally broke down below the 21 EMA before the resumption of the next bull market. Similarly, in the first cycle, we topped out in November 2013, we fell below it, managed to get above it again, then fell below it again. This time, we only found support once on the 21 before we actually fell down here. So the question is, are the first 2 cycles giving us a clue of what we're about to happen somewhere between now and the end of the year over here? So it's something we need to be aware of, and everybody's got to make up their own mind what they deduce from this. Moving on to the weekly chart, something very similar happened. The white line is the 50 simple moving average. In the first cycle, we tested it once, twice, 3 times before we fell below the 50. In the second cycle, in 2018, we came to test it once, twice, and on the 3rd time, we fell below it. And in the current cycle, guess what? We tested it once, twice, and on the 3rd one, we fell below it. Now, in the first cycle, once we fell below the 50 simple moving average, we didn't really come back and retest this. This was as close as we got here. However, in the second cycle, we did come back and retest it on the underside before we got rejected and went to the downside. And currently, now that we've broken above it, we have actually come nearly close to retesting it to the underside before. Are we going to do this now here as well? Just like over here and just like over here. Obviously, no one knows the future, so I'll let you decide what you might think this might happen here over the course of the next 7, 8, 9 months. Well, I thought you might find that interesting. So currently the situation is this. We topped out here at 69. We've created this long-term trend line here. We have our critical resistance point here at 46,000. And as I've said many times, we need to recapture this level here before we can have any resumption to the upside. We've been making a series of highs and lower highs all along the way, as you can see there. And when this current price action came to this point here over the last few days, I noticed quite a number of people jumping on, thinking that because of this rally that we've just had here, people thought, right, we're back on the bull market and we're going to go to much higher levels. And I decided to look at that over the weekend, and I tweeted a couple of tweets yesterday because I got a little bit worried when I was reading a lot of comments in other people's videos saying that they're all in at this price now. They're all in. As I mentioned here, I wasn't going to tweet anytime during the weekend, but like I said, many people were jumping into Bitcoin at a selling zone. This is a selling zone. Look, this is a resistant point. You don't get in at that point. You need to get in one passes above it. So this is where all the smart traders were selling, while some of the people I saw in the comment sections of many videos were buying in at this point here, which is very, very dangerous. And I said quite clearly here that we have to get above 42,600, which is this line here. We must clear that before a run to the 45,500 to higher levels. And I said here, currently, we're struggling to get past that doji candle. Do you remember this doji candle here at 41,700? And I also said that if you look at the circled price actions here, that we're making lower highs again. So 1, 2, 3. So until you get past it, it doesn't make any sense to jump into the price. And then further, I looked into the candle patterns and I found on the 4-hour and the 8-hour, as well as the 12-hour, which was about to close in 45 minutes, I said quite clearly here that bearish tweezer tops forming on the 12-hour chart, and that was that one there, and that was a signal, and that price was about 41,800, 41,900, something like around there. And that is a powerful chart. It's not on a 5-minute or a 10-minute, it's on 12-hour chart. So a tweezer on a 12-hour chart has a high degree of probability of playing out. And this is bearish, of course, so I was expecting last night for the price to come back down. And as you can see on the 12-hour chart, when I tweeted this here, this is the effect of this tweezer top. The price came all the way down to around about 40,300 or something around there. However, there are some bullish developments. If we go to the weekly chart, for the first time since we broke down below the 8 EMA on the weekly chart, this blue line here, we fell down at this point back in November. For the first time, we've raised our head above that exponential moving average here. Now, obviously, that is bullish, but that is a first sign. I wouldn't be surprised if we actually have a rejection here first before we move to the upside. So we'll have to wait for that. But certainly, that's a nice development. And it's basically saying that the trend that we've got here, the bearish trend, is finally, in the short term, weakening the bears, because before we can have an upturn over here, we first of all have to stop this momentum to the downside by having some sideways action, which is what we've got here, and then suddenly to see some tentative signs of the upturn here, which is exactly what we've got. So let's see how this develops. And the reason why I'm not getting overly excited is simply because if you put the 50 weekly simple moving average, which is this white line here, we can see quite clearly we're well below that. And that point is at around about 45,700. And that again brings into play that 46,000 again. So I'll get quite excited if we manage to get above that. So currently we're in this channel here from 69 all the way down here. And we're now trying to make a reversal pattern to this point here. The price, as you can see, is coiling into this symmetrical triangle, making lower highs and higher lows. And I would expect that in the next few days, we're going to be breaking out of this symmetrical triangle somewhere along the line here. And what I'm waiting for this week to see, it can obviously go two ways. Currently, the market is showing signs of strength. I wasn't expecting this relief rally here to the upside. I would have been expecting something like this to have occurred with a flush out down here or to this point here or even slightly lower, to these levels maybe. But the market showed more strength than was expected, and we got to this trend line again, creating another lower high from there to there to there. We were testing this level here. Certainly what I'm expecting is that having seen the first signs of a bullish uptrend on the 8 exponential moving average, that may be the sign that out of this triangle we're going to be moving more to the upside rather than to the downside once we come to some conclusion and resolution here. However, I am expecting one final flush out. Whether we get it or not, only time will tell. But certainly I'm holding off before doing a swing trade here to see whether it'll come back to this level here first of all, or to this level here. And then I'll analyze the candlestick formations and patterns to see whether there is an opportunity of a turnaround at this point or that point before we move to the upside and test this $46,000 mark here. I'm also open to the idea that from where we are currently, if the price does decide to come back and retest this level here, and if we, in an unlikely event, move above it, I would be inclined to take a swing trade at this point here to the upside. Then 52 definitely comes on the table at that point. Although I'm not expecting this, but as intelligent investors, we must let the price action determine our response, not the other way around. So what I'm looking for is basically either in this range here, from where we are currently there, if we break above this, then I go on a swing trade to the upside, or, which is what I'm waiting for, my preferred position is to wait for this price to retreat to this support line here or to this line in the next few days. Before the end of the week, we should have a resolution to this symmetrical triangle apex here. And this 28 is still on the table. We might have a very quick flush out before we make a V-shaped recovery from this point here. So I'm open to all of these because I have a multifaceted approach. I don't have this urge to be either a bear or a bull. When the price is telling me to be bullish, I'm bullish. When the price is telling me to be bearish, I'm bearish. That's how I see things. For me, it's not a clear black and white. There's lots of gray in between. And that's why I take a multifaceted approach of prices to the upside and prices to the downside. And I make my decision based on what the price is telling me is the best way to respond. What I will be looking out for is something like this. If you look at this long wick here, look what happened after that. We got a big rally to the upside. Again, a long wick, which some people call a spring. Once again, once we got that, we got a big move to the upside. If we can get that here with a quick flush out down to these levels or even lower, and the price gets bought up very, very quickly like it did in this part, then that would be your trigger to go long here, either in a swing trade or in a longer position over here. So we'll wait and see, but this is what I'm seeing in the charts at the moment. The reason why I'm saying we should always remain open to all possibilities is that if you look at the high here at 69, and you take it to the bottom here at the 28,000, just by looking at this chart, we can see that if the price can come from the top over here all the way to the bottom here, then there is no reason why it can't go all the way back up to the top there to retest that double top. While I don't think this is going to happen, we must remain open to that possibility if you want to take advantage of the signs that may come along the way which are telling you that this is which way it's going. Because this remains on the table, even though it's a low probability, it is on the table. So my play this week, if it turns out to be this week or possibly next week, is to look for an entry anywhere in this zone here for a retest of this line here at the $46,000 mark. And what I would be doing, but please remember, this is not financial advice, I'm just telling you what I'm doing. Everybody has their own strategy and you must follow your own strategy and how it fits in with you. So at this point, once I get an entry, and it's no guarantee that we'll get an entry, but this is what we have to do as traders and investors. But once we get to this point here, I would be taking 50% of my profits and then wait for price action to tell me what to do. If we go above here, then I go back with that 50% back into an entry towards the $52,000 mark here. But if the price action is telling me that we're going to get rejected, then I take out my other 50%. So this is how I play these resistance and support levels. Only time will tell if we get that opportunity, but this is what I'm waiting for. An entry down here, anywhere around this level here, could even be down here. If we can get a flush out and a V-shaped recovery very shortly by the end of this week. So in conclusion today, what I want to say is that my overall view is that, as I've shown you many times, my view is that we're in a 12-month bear market down here. And eventually, the market will make its way down, hopefully to the 200 weekly moving average here, which is currently at around about 20,000. So I'm expecting the next 9 months for us to hit this line here. Whether we do it with some relief rallies along the way, and then down, or we do it in a much shorter time frame. Previously, it's taken well into the bear market before we hit this 200 simple moving average. But in the meanwhile, while this is happening, we're getting these relief rallies that you can take advantage of. And this is what I'm saying, that in the short term, I would expect some bullish rallies to take place before we eventually come back and retest this down here. And I'm very happy and ready to take whatever the market gives me. Okay, so we'll leave it there. I hope you found some value in this video. And if you did, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, questions, or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and please remember, I might not do a video tomorrow. It might be on Wednesday or Thursday. So please look out for that. But in the meanwhile, in between, I'll try and leave some information on the tweets. Bye for now.